Hello and welcome everybody to today's Commodities Corner presented by myself, Phil Carr, at the Gold and Silver Club. So today, during the live session, we will be covering live market analysis. We will be providing you with a watch list of trading opportunities. We'll also go through a forecast of where we expect gold, silver and oil to move over the course of today's session as we go into next week as well. And as always, we'll be answering questions, providing live support. So any questions, any comments at all, guys, do make sure that you put those into the chat function and we will go through those during the course of today's session. So before we get into it, let me introduce you to the Gold and Silver Club. The Gold and Silver Club is the #1 commodities trading and investment coaching company. We are regarded as the go-to authority on commodities trading. As internationally respected experts, our analysis and our opinions on the metals, the energies and the agricultural markets, they are routinely sought by major financial television channels and publications, which include Bloomberg, Reuters, CNBC, the Financial Times, the Wall Street Journal. Our team of experts has trained and mentored over 100,000 private traders from all over the world to increase their wealth and generate substantial income through commodities using our exclusive research-driven strategies. So for more information on the Gold and Silver Club and our expertise, please visit our website, which is www.thegoldandsilverclub.com. Okay, so with that said, guys, we'll have a look at the charts very shortly and some of the trading opportunities which are developing. I thought just before we go into that, just want to give you a bit of a view of where we are in the markets at the moment as we're heading into roughly about mid-October now, so about 2.5 months left of the trading year, and to give you an idea of the top performers of 2016 and the worst performers as well over this year. So you will note immediately, if we have a look at the top here, the best performing market over 2016 has been sugar. Sugar has had a tremendous move, particularly over the last month here. We saw sugar break out to 4-year highs. We've seen big surges over the month of September, and it's currently up over 42% this year. Now, you'll notice among those top performers includes Brent crude oil as well, which is now up 25%, silver, which remains up around 25%, and gold, which is now up just under 17% for the year. Palladium also up 13%. So you can see a lot of the markets that we do trade on binary have been good performers over the course of 2016. Some of the worst performers this year have included wheat, the pound, of course, as well. We've seen significantly fall over the course of certainly since Brexit, and more recently, again, we've seen another drop lower. So if you just bear this in mind when we have a look at some of the trade opportunities, that the majority of the time, but not always, but we are more in favor, especially when we're transitioned into a bull market, of going for long positions on markets such as oil, gold, and also silver. Now, there are opportunities to sell into those markets, but if you have a look at their overall performance over 2016, where we transitioned into a bull market coming out of a bear market, where we've seen good inflows, especially from funds over 2016, especially at the start of the year, where we saw some big positions added to gold and also to silver. So we'll have a look at this in the context of what we're seeing in the charts at the moment, because we've recently seen some corrective pullbacks in gold and silver, which put gold and silver at interesting levels, and oil following on from the OPEC announcement, which is about a couple of weeks ago now. We saw a 10% surge to the upside, and oil was back towards its 2016 highs as well. So those are some of the trade opportunities we'll have a look at. Platinum also up around 4% this year. So the precious metals, all at this point in time, they still remain up in 2016. So what we'll be looking at today, guys, is we'll have a look at the two types of trade, either higher or lower trades. Very simply, if you select higher, you will win the payout if the market exit price is strictly higher than the entry price. And if we select lower, you win the payout if the market exit price is strictly lower than the entry price. So the way this works, as I'm sure a lot of you know, but just as a reminder, is when you are entering into a trade, what you want to, of course, get right is the direction. You want to time your entry so that you're getting in at the price that you would like. And of course, then we just need to look at the duration, so how long you want to stay in that trade for until you think it's going to hit your profit target. And that's what we'll be having a look at today. We'll see if there's some live trading opportunities. Oil's looking quite interesting at the moment, and certainly gold and silver are as well. As we go into this afternoon, we've got a few key news items At 1:30, which is about an hour from now, 1:30 London time, we've got core PPI, and then we've got retail sales after that. We've got one of the FOMC members speaking, and we have Michigan consumer expectations at 3 o'clock. And then Janet Yellen is due to speak this afternoon, or a little bit later this afternoon at 6:30 London time, which can often move gold and silver and also the US dollar index. So it's worth bearing in mind we're probably in for some volatility over the course of the US session today. So with that said, we will move it over to the technicals. I will bring out my charts here, and if there are any questions at all, do make sure you just keep those coming in the chat as well. So what we'll do here, we'll start off with, let's have a look. We'll start off with probably gold or silver, and let me just do a screen share. Make sure you can see my screen okay. Okay, so just a quick check-in, guys. You can see my screen okay. We're just currently looking at the silver market right now. Yep, great stuff, Therese. Thank you. Okay, good. Right, so if we have a look at the chart, we'll move over and we'll have a look, first of all, at the US dollar index here. And the US dollar index is currently, it had quite a big pop to the upside. This is the weekly chart, and you can see where we actually came in and we hit overhead resistance just yesterday, and we retraced from that level. On the daily charts here, you can see we had quite a large sell-off yesterday. We had a pop to the upside today, and it's now retracing a little bit. Looks like the potential start of a V-shaped reversal pattern. We could get a revisit lower here over the course of the US session today. Short term, the US dollar is overbought, but it does get bid back up. The majority of pullbacks we've seen over the last couple of weeks have seen the US dollar index get bid back up. I think short term we might be able to see a little bit more downside on this market, which will be important because it will move inversely to gold and silver. So first of all, if we have a look at the silver chart here, there's a few points that we need to note at the moment, and I'll just quickly change my Fibonacci levels here, just extend those out for you. Okay, right, so let's just double check that. There we go. We've got the levels. That's it. That's what we want. Okay, good. Right, so the first point I want to show you at the moment, silver is sitting at the 50% Fibonacci level, which is exactly the halfway line this year between the run-up that we've had from the lows here up to the high. So remember, silver still remains up 25% in 2016. At one point, it was the best performing commodity of this year. It was better than sugar. It was up just under about 50% after Brexit, when we saw this huge capitulation to the upside, when we came all the way up to over 21 US dollars here, so per ounce. Now, at the moment, we have recently corrected here, and we've had a pullback right from the upper end of the trend channel, and we've come all the way back down to supportive zone, support the 200-day moving average, support at $17 per ounce here. And we've been consolidating all week here. So we formed a rejection candle last week after the non-farm payrolls came out, and we saw into the close, we saw a hammer form, we saw some follow through on Monday, but then we've had a lot of overhead resistance here about the 1785 zone. So right now we continue to consolidate, and we're waiting to see whether we can get some sort of a breakout or retracement higher here. So what we would like to see in order to see more momentum to the upside would be a break higher here, back above the $17.85 zone. So if we were to get a break above that level, that is where we could really start to see some good follow through here and see a rotation back towards the upper end of this trend channel. So right now, we continue to watch silver, and if we were to see a breakout above that level, that provides a trading opportunity where we would look for a higher trade, so essentially for the trade to follow through back towards resistance. Now, on the flip side of this, if we were to see the US dollar surge today, particularly from Janet Yellen's speech later on, we could be in for a sell short opportunity here. So we might see the potential for silver to break down, break below 17 US dollars per ounce, and start to make a move back towards around the 16 to 1650 zone. That would essentially, the next major level of support here for silver is sitting just around $16 per ounce. So if we were to see this really pick up momentum to the downside over the next couple of weeks here, if we did see a break of major support, those would be the next major levels I would look at here for silver in terms of a downside target, and also a opportunity to add to this market as well. The May lows are being watched very closely here. The longer we consolidate within this tight range for silver, where we've been consolidating for a week here, the bigger the eventual breakout will be. The more that you see the price structure get tighter and tighter, and in fact, we can actually draw just a pennant formation just to show you the overall price structure. At the moment, you can see here where you've got higher lows, lower highs, and we're getting really tight into the pennant here, into the apex of the pennant. When we eventually get a breakout, this is where we could have a catalyst for quite a significant move, and that is what I would be looking out for over the course of the US session this afternoon. Now, if we have a look at gold, we've got a similar structure on gold at the moment. It has been ricocheting between support and resistance. Very tight range for gold this week. It's very unusual to see such a tight range on gold, where it's only been moving about 100 to 150 points on its daily ranges here. So it tells us a couple of things. At the moment, sellers are running out of steam to actually have a reason to sell around these levels, so we haven't seen 1250 given way over the course of this week. At the same time, we haven't seen a breach back above the 200-day moving average or back above 1265. So the price range is getting very tight here, and I would expect to break out soon. It could be today, or it could be as we go into next week. We do have a basing formation where we've got the potential here for gold to develop a V-shaped reversal pattern and then retrace back towards the 1285 to 1300 level. I'm looking out for that potential opportunity, okay, so for a basing formation and for us to break out higher here. So I'm keeping an eye on that. We've also, because the range has got very tight here over the last week, we've also, same as silver, we've got a pennant formation where we are looking for a breakout of this pennant, and it could be quite significant. So just bear that in mind. So I move to the downside, especially if we see gold take out the 1240 zone. There is a lot of clean air until gold gets to around about the 1200 to 1210 layer. So if we do see gold break lower, there could be a good sell short opportunity. There's about a 300 to 400 point move lower, and we could look at that for a binary trade for the price to close lower, essentially on a break of support. On the flip side, if we do get a move onto the upside, if 1250 is the base here, or 1240 from last week's non-farm payroll, but the 1250 level provides enough support here, we could get ready for the next short-term leg higher, and we'll be looking for a rotation back towards about 1280 to 1300s. So in my opinion, it's still just moving between the support and resistance zone. On the larger time frames, yes, gold and silver are significantly up. They're some of the best performing commodities over 2016, silver in particular. So more than likely, we've got the potential for a certainly over between now, I'd say the first quarter of next year, more upside potential for the gold and silver market. At this point in time, we want to see what the Federal Reserve does in terms of going ahead with an interest rate hike as well, and we'll be watching very closely the comments from Janet Yellen later on today too. So those are really going to be probably a catalyst for the next moves here, and as well as a lot of US data that we've got coming out this afternoon. So we're just really stuck in a tight range here with gold and silver, where we're waiting for them to break out of those ranges and then provide us with a good trading opportunity. Now, moving over to oil, I do quite like the price structure of oil at the moment. Yesterday, we formed a rejection candle right at this previous level of resistance turn support, which is just about $50 per barrel here. We saw a pop to the upside, and what I'd like to see oil do is, in fact, break back above $52 per barrel to start building up momentum to the upside, and then really start to build a base back up to around the 54 to 55 zone, which would be the upper end of this trend channel as well. Now, ideal situation would have been after the recent breakout that we've seen a 10% move following on from the OPEC announcement a couple of weeks back. I would have liked to see a corrected move lower, back towards the lower end of the trend channel, in order to give us an opportunity to add again to this position at a better price. It is getting a little bit overbought at the moment, oil, in the short term. It has the potential, if it can break above its swing high here, it has the potential to follow through and go higher. But at this point in time, I would have rather liked to see a corrected pullback back down to the lower end of the trend channel, pick up a position around this support zone, and then look at that for a buy, taking it back towards the upper end of the trend channel. Again, oil is also one of the best performing markets over 2016. I do see more upside for this market, as I'm sure a lot of you are aware who've been coming on the Commodities Corner for a while. We've been talking about the potential for oil to break back above the highs of 2016 for its second leg up in its bull market, which is essentially what we've seen more recently off the back of the OPEC announcement. I'm looking for a potential pop to the upside. Now, I can come back to oil shortly for a potential trade short term for a move back higher here. We've got the Baker Hughes report, which is coming out later on this afternoon. So that could be an important mover for oil here as well. At the moment, nice hammer which is set up around this this zone, but it's just a little bit overbought here. Now, typically for a trade where you would be needing this to rally a certain amount of points to give you a reasonable risk to reward, it's not great in terms of the risk to reward ratio at the moment. But for a binary trade, for the trade to go higher, could actually work out because you only need the trade to close 1 point higher than your entry on this market in order to win the entire payout. Okay, so I just put that on your radar, and also as well as that, we'll just go over, we'll hover over and have a look also at platinum and palladium as well. So we've seen certainly some quite large corrective moves on both of these markets recently, which has been in line with what we've also seen on gold and silver. Now, you will note on palladium right now, it's just come right back down to the lower end of its trend channel. It's kind of forming a hammer around this zone at the moment. In fact, if we just draw on some more recent Fibonacci levels, let me just quickly change that for you. Here we go. You can see we are spot on. We've just come down and hit the 61. Let's have a look at that. Actually, that will be, we'll just switch these round. Yep, 38.2. We're back at the 38.2 Fibonacci retracement level at the moment. So what does that mean? Well, it means we've got some confluence here. We're actually around the 100-day moving average, little hammer forming at the lower end of this trend channel as well. And obviously it's getting quite oversold at the moment, palladium. That actually could be a market to watch today too, seeing how we form into the close as well. That could give us a nice trading opportunity as we go into next week. I would watch out for that with palladium. If we can pick up some momentum to the upside, that could be a good buying opportunity as well, taking this right off the lower end of the support zone. Again, quite a few news items are coming out this afternoon, which should confirm either a bullish move or a bearish move. We'll have a much better idea as we come into the close today as well for trading opportunities as we go into next week. So I do quite like palladium here. Platinum at the moment has also had quite a significant sell-off. You can see the move that it's had over the last week, which is continued with the sell-off that we've seen. We've got good confluence with what we've also seen with gold and silver here as well. So right now, in terms of what I would look at for this market, in fact, I would say platinum is the weaker out of the metals right now. You've got silver leading, gold after that, then palladium, and platinum after that. So I would probably hold off on any buys on platinum right now. I also think where it's sat right now is not a great place. It's getting overextended for a sell. So I would more than likely look at palladium here and also silver for some potential opportunities this afternoon. I'll just bring it back to silver and I'll show you exactly what I mean here. Okay, so silver, yeah, it's developing a bit of a hammer now. So you can see what we really need to see is a breakout above the consolidation here. So if we do get a breakout above this consolidation, breach 1785, that is where silver could get a move on. We'll see a nice pop to the upside. You'll see short covering. So from those who've been selling into this market, they'll start to unravel their sell shorts. They will get stopped out, and you'll see a big pop as buy orders get triggered above this zone as well. So I would really watch out for this. These sort of consolidations and pennant formations typically give rise to some really good breakout trades. Now, in terms of underlying support with silver, obviously you've got the fact that it's in a bull market. It's up 25% this year. A lot of traders are looking to pick up a price on silver at the moment. Obviously, there's a lot of investors and funds looking actually at lower prices here to pick up a good opportunity to re-add to this position, but it might not do that. It might not fall lower. It might just hold support around the 200-day moving average, around this level, 50% Fibonacci level. That might be it for this correction. And then if we start to get a breakout to the upside, we could see, certainly in the short term, a pop back towards the upper end of that trend channel. Okay, good. And finally, just coming back to oil as well here, we'll just bring out WTI crude oil. Yeah, I do see some short-term momentum to the upside. I tell you what, I would say the ideal entry on this position would have been a break of the hammer candle on the daily chart from yesterday. It is starting to pick up some pace here. What I would suggest is if it does for a binary trade, if oil breaks back above $52 per barrel, that is a good opportunity because we can really start to build up some good momentum to the upside. And particularly from a point of view of trading it on binary, you only need the price to close 1 point higher than your entry in order to win the entire payout. Otherwise, I suspect we could not follow through from, you can see there's a mother candle here as well, which oil in the short term needs to break above, which is around the 51.60 zone. If it can't break above that and rotates lower again, you could start to see some sort of V-shaped reversal pullback, and I'm looking at a better entry there for oil. So I would either trade that on a retrace lower, get in at a better price, or on a breakout above the 2016 highs, because otherwise we could just have a double top in place and you'll just see profit taking rolling over of this price structure. But I'll tell you what, with that said, let me just talk you through our top trade that we've personally had on oil over the last week, which had now just come out of on Monday. And that was, of course, our WTI crude oil trade, which we've taken from OPEC, which is for a rise trade above 45.15, which worked out very nicely, where we've exited the trade there in good profits after we saw a 10% move after the OPEC meetings. That really worked out nicely indeed. Now, of course, if you would like access to the trade setups that we trade at the Gold and Silver Club, our live trade ideas shared with you, ready to implement, do make sure you go across to www.jointhegoldandsilverclub.com, complete the application form, and we will get in touch with you ASAP, okay? So it's www.jointhegoldandsilverclub.com. Who's it for? What does it include? Well, essentially, whether you're a new trader and you're looking to develop a solid understanding of the markets, fast track your results, or even if you are an experienced trader but you're looking to take your trading just to that next level, the private members live trading room is definitely for you. So what it includes is the following. You get access to our exclusive live trading room webinars, so you can watch the Gold and Silver Club expert traders analyze the commodity markets right in front of you, picking out profitable trade setup, sharing exact entry, exit points, profit and stop loss targets, walking you through live trade ideas ready to implement for instant results. As well as that, you get real-time notifications, so alerting you when to enter a trade. Those include details of where we're entering, exiting, placing our stops on each of our positions as well. All of those notifications are sent out in advance notice to ensure you've got lots of time to get into your positions, and we also provide you with commodity research and market insights. So you get exclusive access to our proprietary research and market insights to really help you boost your win rate and ensure you are getting on the right side of trades. Our trading research is there really to give you the ultimate edge in the markets and fast track your results. So again, guys, if you would like to get in touch, it's just www.jointhegoldandsilverclub.com. You get exclusive weekly live trading room webinars, live trade setups ready to implement for instant results, real-time trade notifications, exact details of where we're entering, exiting positions, trade management, a weekly trading plan with a watch list of trade ideas for the week ahead, live trade support to help you through each trade, and institutional trading research and commodity insights to give you an edge in the markets, okay? And I will just put that link into the chat for you all as well. And with that said, guys, I'll go through just the major news items that you want to look out for again today. Okay, good. Right, so today, in approximately about 40 minutes time, we have the core PPI numbers and core retail sales as well. So that is going to create some volatility at 1:30. And moving into this afternoon, we've got Michigan consumer expectations. That is at 3 o'clock. And then we have Fed Chair Janet Yellen speaking, and that is going to be at 6:30 London time. Now, typically with Janet Yellen, when she does provide a speech, particularly after the minutes of the FOMC, which came on Wednesday, we could see quite an explosive move. So just bear that in mind, that we could get some good volatility this afternoon off the back of Janet Yellen's speech. So with that, guys, I wish you, of course, good, profitable trading. Have a fantastic weekend, and I look forward to speak to you very soon. Wish you all the best. And of course, I very much look forward to working with those of you who will be making an application and joining us at the Gold and Silver Club. Okay, guys, take care. All the best. Speak soon. Bye-bye.